You tap your card for an $8 coffee. Declined. The cashier looks up for half a second too long. Not rude, just enough for you to notice. You check your phone fast. Your balance says $3.17. You forgot your music subscription charged last night. You step out of line and move money from savings. The transfer takes longer than normal. You refresh the app again, still pending. Then the notification hits. Overdraft fee, $35. You stare at the screen. The fee is over 4 times bigger than the mistake. Before you can even think about it, another payment goes through. Your phone bill, another overdraft fee, another $35 gone. In one morning, being short $8 became being short almost $80. You call the bank while walking to work. A machine answers first, then hold music, then another machine. Finally, a voice picks up and tells you the fees cannot be removed right now. You hang up without saying anything. Somewhere between the declined card and the hold music, you stopped feeling like a customer. Because banks do not see money the way you do. To you, your bank account is your life, your stress, your work, your future. To the bank, it is a category, a level, a score. Every account is ranked quietly in the background. Your net worth changes how long you wait on calls. It changes which loans appear on your screen, which fees get removed, which doors open, which people return your emails. The higher your net worth gets, the less friction exists in your life. And most people never realize they are moving through invisible financial classes until the system starts treating them differently. Your account stays under $1,000 most of the time, not because you are lazy, because every month feels like a race you start already behind in. You learn to check your banking app before buying anything. Gas, food, a ride home, every small purchase becomes a math problem. Then the fees start. A $12 minimum balance fee because your account dropped too low. A $35 overdraft because a payment cleared before your paycheck arrived. A declined card at the grocery store even though you were sure there was enough left. You stop trusting the number on the screen. The bank sends emails almost every week now, not to help you, to offer you credit cards with huge interest rates and tiny limits. They call it opportunity. But the offer only appears because the system knows you are short on options. You try calling customer support after another fee hits. The wait time says 47 minutes. You put the phone on speaker and keep working while hold music plays in the background of your life. Nobody at the bank knows your name. Nobody calls to warn you before the fees happen. The system only speaks after it takes something. At this level, the bank does not see potential. It sees risk, instability, a customer too small to protect and too stressed to leave. And slowly, you realize something painful. The less money you have, the more expensive basic banking becomes. You're not building wealth yet. You're surviving penalties. Something changes when your account finally stays above zero. Not rich, not even comfortable, just enough space to breathe for a second before the next bill arrives. You build your first real savings cushion. A few $1,000s sitting in the account changes the feeling of everyday life. A flat tire no longer destroys your entire month. A surprise bill still hurts, but it does not feel like the end of the world anymore. The bank notices too. The overdraft fees slow down. The app starts showing you better account options. A starter credit card arrives in the mail with a higher limit than before. Not good terms, just less terrible ones. Then come the loan offers, small personal loans, car loans, payment plans. The system that once blocked every door now leaves a few unlocked. You start feeling safer, but not free. Because every improvement still comes attached to interest, monthly payments, or hidden conditions buried deep in the fine print. The bank stopped punishing you every week, but it still makes money every time you move. And slowly, you learn something strange. The system cares less about how hard you work and more about how predictable you look. It wants direct deposits that arrive on time, spending patterns that repeat, balances that stay steady. The bank trusts routines more than effort. You could be working twice as hard as before, but the only thing the system sees is that your numbers finally look calm. You finally breathe, but the system still owns the oxygen. The bank doesn't trust you yet, but it has started watching you differently. Around $50,000, the system starts acting like it remembers you. Not in an emotional way, in a business way. One morning, you open your banking app and notice your credit limit increased. No phone call, no request. The bank just decided you could handle more debt. A few weeks later, you apply for a car loan. The interest rate is lower than you expected. Still expensive, but no longer painful enough to scare you away. Then a strange thing happens. You get charged a fee by mistake. You call customer support expecting another long fight. But this time, the person on the phone removes it in minutes. No transfers, no hold music looping for an hour, just a quick apology and a refund. The tone changes too. Employees smile a little faster when you walk in. Emails begin with your first name. Pre-approved offers appear in the mail almost every week now. Credit cards, balance transfers, personal loans. The system keeps inviting you deeper inside itself. At first, it feels personal, like you finally proved yourself, like the world started respecting your hard work. But then you realize something uncomfortable. The bank is not reacting to your character. It is reacting to your patterns. Your balance stays stable. Your income arrives on time. Your spending looks predictable. The system sees someone easier to profit from now, someone safer to lend to. You notice the treatment changing before you fully understand why. You're no longer invisible. You're monetizable. Around $100,000, banking starts feeling smoother. Not because the system became kinder, because you became valuable enough to keep. One day, you get an email introducing you to a dedicated banker, a real person with a direct phone number, someone who says things like, "Reach out anytime if you need help." A few years ago, you waited on hold for almost an hour just to ask about a fee. Now someone answers in minutes, sometimes seconds. The language changes too. Your account is now called Preferred. Your app unlocks new features. Transfer limits increase. Savings rates improve slightly. Loan offers come with lower interest rates than before. Nothing dramatic, just less resistance everywhere. A payment issue that once took 2 weeks to fix now disappears in one afternoon. A fee gets removed without an argument. A wire transfer clears faster than expected. Small problems stop becoming life interruptions. At first, it feels normal, like this is how banking is supposed to work. Then you remember the earlier years, the hold music, the declined cards, the cold replies from customer support. The system did not suddenly become efficient. It became efficient for you. That is the real difference at this level. Convenience is no longer something you hope for. It becomes something quietly built around you. And the strangest part is how fast you get used to it. You stop expecting problems because the problems keep disappearing before they reach you. The bank protects the relationship now because the relationship makes money. The same rules still exist. They just stop applying equally. Around $500,000, the system stops waiting for you to ask. Now it starts coming to you first. The emails look different at this level. They are not advertisements anymore. They are invitations, private investment webinars, small business events, market updates hosted by people with titles you used to only see on TV. Then the phone calls begin. A competing bank offers better savings rates if you move your money over. Another offers lower mortgage rates and premium relationship benefits. For the first time, banks are not just serving you. They are competing for you. Even the small details change. You apply for a mortgage and the terms become flexible. Interest rates that once felt fixed suddenly become conversations. Fees get reduced quietly. Limits increase without effort. A new card arrives in the mail. Heavy metal. No spending limit listed. Hidden travel benefits. Airport lounges. Concierge services that book things for you while you sleep. The strange part is how quickly life starts moving faster. Customer support answers immediately. Problems get solved in one call. Transfers clear sooner. Meetings happen quicker. Delays shrink around you. You realize something most people never notice. Money does not only buy comfort, it buys speed. At lower levels, every mistake costs time. Waiting on hold, filling forms, calling back again. At this level, time starts getting protected the same way money once was. You stop asking for access because access starts finding you. And slowly, without anyone saying it out loud, you understand the real luxury the wealthy are buying. At this level, time becomes the real status symbol. Around $2 million, banking stops feeling like a service. It starts feeling like a relationship. You are introduced to private banking for the first time, not through an ad, through a phone call. Someone from the bank asks if you would like to explore more personalized solutions. A few days later, a wealth advisor meets you in person, not at a branch, at your office, or over dinner. The bank comes to you now. The conversations change too. Nobody asks if you want a credit card anymore. Instead, they ask about your long-term plans, your retirement timeline, your family, your taxes, your future children. You hear new phrases for the first time: estate planning, tax efficiency, asset protection, generational wealth. The system assumes your future matters now, so it starts helping you protect it. Investment opportunities appear before the public sees them. Special funds, private deals, priority access. The bank starts opening side doors most customers never know exist. And the strangest part is how quiet everything becomes. Problems disappear faster than they appear. Paperwork moves quickly. Calls get answered immediately. Delays become rare. Life feels smoother in ways that are hard to explain to people outside this level. That is when you finally understand what wealth really buys. Not just luxury, not just comfort. Distance from friction. The wealthy still have problems. They just experience fewer obstacles between the problem and the solution. At this level, the system no longer sees you as a transaction. Your future has become part of the business model. The system stops selling to you and starts consulting you. At this level, money stops behaving like something you simply use. It starts behaving like something that shapes the rules around you. There is a point where the system no longer treats you like a normal client. The forms get shorter. The waiting gets removed. The decisions happen in rooms you never enter, not because you asked for it, but because your name now changes how people plan. A bank manager is no longer your contact. You are introduced to private advisors who speak in long-term structures, not monthly payments. Lending stops looking fixed. It becomes flexible, shaped around your deals, your timing, your influence. Even risk is discussed differently, as if your involvement changes the outcome itself. You start hearing about investments that never appear in public markets. Opportunities shared quietly before they become visible to everyone else. Not advertised, not listed, just offered to a small group of people whose presence changes the math. Meetings begin to include executives, not sales teams. Decisions are made faster, with fewer barriers. Your participation is treated as valuable, sometimes even necessary for the structure of a deal. And slowly, you understand something deeper. Wealth at this level is not just about buying power. It is about institutional influence. It is about how deeply you are built into the system itself. The richest people do not operate in the public version of the system. The bank no longer manages your money. It protects your presence. Always starts the same way in your mind. That small moment returns again. The declined $8 purchase, the embarrassment, the confusion, the feeling that something in your life is not fully under control. It feels personal, like a judgment on who you are. But now, you can see it differently. Because the strange truth is this: you are still the same person, same intelligence, same personality, same effort. Nothing inside you has changed in a dramatic way. You still think the same way, speak the same way, make decisions the same way. Yet something outside you has shifted completely. There is now a different number beside your name. And that number changes everything. The system that once felt harsh did not suddenly become kind. It did not learn to care more about you. It did not grow more emotional or fair. It simply began to classify you differently. The rules that once felt tight start to loosen, not because they changed, but because your position inside them changed. This is the part most people miss. The system was never reacting to your character. It was reacting to your leverage, your capacity, your financial weight inside its structure. And as that grows, the world starts to feel different, not because the world improved, but because your access to it did. Banks don't measure character, they measure leverage, and the higher your net worth climbs, the more human the world suddenly becomes.